Good evening, traders. I hope you're doing well. So today we're going to be talking about the previous weekly high and low. The previous weekly high and low is important because it helps us understand where the market may be heading as it opens up in the new week. And that's exactly what we're going to be talking about today. We're going to be talking about Monday and its significance. We're going to be talking about some statistics that I have to share with you, and that will ultimately add more confidence to your trading starting today. Now, like anything, you should never take anyone's word for this. You should go out and test these things yourself, confirm them to be actually true, and really train your eye to seeing these things by carrying out the test yourself and gathering these statistics. But with that, let's get straight into the video. So what we hear on a day-to-day basis is that Mondays are shit, but nobody can really explain why. I think there are a few reasons for this. First of all, it's definitely down to a psychological reasoning. Number one, people, do a lot of analysis over the weekend. They do hours and hours of backtesting. They're reviewing all of their losses they've taken over the last week. Maybe you had a really, really shit week and you start looking for other information to help you. You start studying different strategies. You start backtesting other strategies and then spreading your focus thin. And as you spread your willpower thin, as you spread your focus thin, as you spread it across different things, your thinking power will decline with that as well. And as they're starting to do all this work over the weekend, what happens is they start to gain all this confidence. They're carrying out hours and hours of analysis and they're ready for the new week and they're feeling positive. And the problem is they attach a positive expectation to the new week. Monday opens up then, and because they're excited to try out their new strategy, they're excited to see their analysis playing out, and they've attached a positive outcome to that analysis. When they don't get what they want, it leads to an emotional experience, one that now makes Monday more of a traumatic experience on a week-to-week basis. So the reason why they might not trade Monday anymore is from a psychological problem, not a data-driven problem. The next reason is that it's a new week. Majority of people, I'd say 90% of people, aren't keeping up with fundamentals. They don't understand the fundamentals. They don't understand the macroeconomic drivers or anything like that. And if you are interested in learning about the macroeconomic drivers and fundamental drivers of the market, you can click the link in the description below for our Conquer Macro community. But a lot of people aren't keeping up to date with them. So what happens is they're coming into a new week, and all of a sudden they're trying to counter trend this market. They're trying to call lows, call highs, without really understanding why is this market heading with such momentum in one direction. Why is the one-sided volume so strong? It's not because we have a break of a trend line. There are real economic changes happening around the world that are causing the supply and demand to change for this currency. And then with the video title in mind here, they don't understand the characteristics of Monday, which links back to the previous weekly high and low. So let's get into this. On my screen here at the moment, you can see a screenshot of a chart. Okay, now these examples are going to be on euro dollar, and the study we're going to carry out is on euro dollar as well. So any statistics shared here have all been basically collected around euro dollar itself. So these red lines that you're seeing on the chart at the moment are basically the previous weekly high and low. So this will be the previous high of this week here, and that will be the previous low of this week here. And as you can see here, just to help everyone see where we are, this here is the start of a new week. You can see that this here is Monday, Tuesday, Wednesday, Thursday, Friday. So for now, all I want you to do is I want you to keep in mind where we are at in this week. Now, here's the interesting thing that a lot of people don't understand. As Monday opens up, it's gravitating towards one of these previous weekly highs or lows. And this will happen almost every week. Obviously, of course, we're going to get some inside weeks, but from a majority point of view, we are heading it to either extreme on a week-to-week basis. Now, the thing is, when we're arriving in on Monday, a lot of the time I only want to start trading as we've either broken a high of that week or triggered a high of that week. So if this was Monday, that would be the high of the week, and this would be the previous weekly high. I want one of these to be triggered before entering the market. The reasoning for that is the characteristics of a weekly template shows that over a longer period, if you're trading a market that hasn't hit a previous high or a previous weekly low, you have more of a higher probability that we're going to have pretty choppy conditions. Or until we reach the weekly high or the weekly low, we're going to have this kind of choppy price action, no clear highs and lows, and more so just this kind of gradual trend up that doesn't really give us any real opportunity to add size into, which is very important. So why should you wait? Here is the perfect example. You can see here, this market is just ranging. And although if you are more of a support and resistance trader that's just blatantly trading off price action alone, this could be a really, really great week for you where you just are profiting from all these highs and lows and you're having your best week yet. But as you can see, even as we carry into a new week here, the market's, price action is just gradually working its way up to either a high or a low. Now, let's have a look at some statistics. Here again, what we can see is the market breaks up, takes out a high, the previous weekly high of the last week, and then hunts to the opposite side. And I've seen people talk about this before, and they've said that when we hunt a previous weekly high and we come back inside, there's a very, very high probability that we're going to go back to the opposite side. Well, the fact is, over the last 2 years on euro dollar, we have only seen that 13% of the time. So the metrics for this is, for this test, I carried out a test saying if the market triggers the high and closes on the day back inside, what is the probability then that by the end of the week, so by Friday, we were going to hit the opposite side of those previous weekly boundaries? It's only 13%. And this is the thing, you don't want to trust everyone on YouTube. You don't want to trust everyone that you see on your social platforms. The best thing you can do as a trader and for your own career is to go out and test these things. Fall in love with the process of testing and figuring out these things for yourself. Now, the interesting thing about this is the statistic becomes a little bit stronger if we target the midpoint. So if the market breaks out and then comes back inside, what we see is as we carry into the next day, we have a higher probability of 52% over the last 2 years that we will at least come back to the midpoint. And when the days where we did hunt to the opposite side, it had a 75 or 80%. I can't remember the figure off the top of my head. I don't have it in this video, but you can check that yourself. Probability of taking place, of hitting the opposite extreme in the next day. So we had the trigger, and then we had a very high probability that in the next day, when it did take place, which is very low, okay, it didn't take place that many times, but when it did take place, it happened within the first day. Now, think about it already. I'm constantly talking about statistics. I'm constantly talking about working with the data in front of you. All of a sudden now, if you're taking a sell position here and your take profit is all the way down here and you're expecting it to reach there by the end of the day, well, you only have a 13% probability over the last 2 years that is going to take place. Is that a bet that you're willing to take? In my eyes, it's not one I would take. And this is the importance of working with statistics, because you might visually see it work this week. You might visually see it work again the next week, but over time, over the 2-year period, the statistic is very low. And that is why the sample size is essential that it's large. Another interesting statistic, and I've shared this with members before, is that we can actually formulate metrics around looking about where the market is going to head when it opens up. So here's an interesting statistic for you about previous weekly highs and lows. If we look at where the market has opened up and we look at the previous weekly high and the previous weekly low, we have on euro dollar over the last 2 to 3 years, we have an 86% probability that we will gravitate towards the closest high or low that was closest to the opening price. It happened 31 times on Monday. So it gravitated on Monday and hit that low on Monday, 11 times on Tuesday, 3 times on Wednesday, and 6 times on Thursday. So really it's around the year's worth of data here, okay? Or well, 3 years worth of data here. And we can see here, once again, the market is just slowly gravitating towards either a high or either a low or a high. And I just double checked there. So this data here that I'm showing you was from the 3rd, it was from the 20th of March, 2023, all the way back to the 25th of, or let me have a look here. Sorry, back to the 10th of January 2022. So yeah, just over a year. But it's very interesting to see that 86% of the time we start gravitating towards the closest previous weekly boundary from its opening price. So let's just have a look at some more examples here. We can see here, look at this market. It never reaches its previous weekly high or low. In this case, you can actually see that this statistic failed. So here will be the opening price. And you can see, even visually just looking at this, this is closer than this high here. So this area failed. But the interesting thing about it is the characteristics that take place of a market that hasn't hit its previous weekly high and low boundaries. Look at the price action. It's really, really shit. There's not much opportunity there. Very small candles, no momentum, and it's just gradually moving until we see a large burst up and we still don't reach those previous weekly boundaries. So the reason why I think it's important to understand this is not just the statistics that I've shared with you this evening, but it's important to realize that, okay, you know, this market, let's say you're coming into Wednesday, this market hasn't hit our weekly boundaries yet. Maybe I want to stop trading this market. If I've had a considerable amount of losses so far this week, maybe I should be looking at markets that have broken outside of their weekly boundary, because there tends to be a very large difference in the behavior of that market. And let's just have a look at some live examples here, and you can go and do these tests yourself. But as you can see here, here is a Monday that has triggered its low. Okay, so we've triggered that previous low. And as you can see, the volatility, the market behavior itself, there are a lot bigger moves, cleaner movements. Market structure is, you know, holding overall. And it's not this kind of shitty little price action that we're seeing in a week where we don't hit our weekly boundaries. So like here, we're just gradually working our way up. But once again, look, we open up on Monday, the opening price is closest to this weekly boundary, and we're working our way there. Why? Because we have an 86% chance of doing so. We can have a look here again. Monday's closest weekly boundary is here, and we work our way up there. So it's an amazing statistic for trading Mondays overall. You know, here again, we gradually work our way down through the entire week. And we break down here on Monday. And in this case, we actually do reach the previous weekly high. But remember, that's not very common. It doesn't take place that often. 13% probability of that taking place over 2 years. In this case, we can have another look. Monday's closest opening price, you can see here. We hunt the nearest level. We did even have a pump up higher and if you were able to catch that pump here, maybe you're taking an area of this support level here, or resistance area here, whatever it may be. But if we're pumping up into that area, and well, 86% of the time we should be heading and targeting the closest weekly boundary to the opening price, you're going to target this area here. And in this case, you can see when we broke out of that weekly boundary and we came back inside, we did target the previous extreme. Here we can see Monday opens up. What does it do? It hunts the closest weekly boundary. This market plays around but never reaches its midpoint. Again, we hunt the closest weekly boundary. These aren't setups you might really be able to get into, but it's still very interesting to see. Here is Monday. The closest weekly boundary is here, and we never even come back to that boundary itself. And Monday then does it again here. Here is the closest weekly boundary, or actually in this case it fails. So we can see here the close weekly boundary is up here, but we never quite reach it. So you could develop metrics around that as well. If the market actually starts traveling a certain distance away, maybe the probability will get lower that we actually ever see a reversal. So you can jump a little bit deeper into those statistics yourself. But for anyone who trades Monday, this is an essential statistic to have because it helps you understand where the market is gravitating towards. And this is why statistics in general are so important. And what I'll do is I'll just add in the weekly open here. Let me just do that here, weekly open, and we can see it a little bit more visually. So in this case, look at this. We have a week that stayed inside and never hit its weekly boundaries, an inside week. Not really great price action if you're trading SMC, if you're trading supply and demand, more trend trading strategies overall. This is going to be your worst nightmare. And these are the weeks where we see lots of people saying the markets are very choppy, oh, price action is not that great, blah, blah, blah. But they never ask why. Okay, why? These are the weeks where they're having their most consistent losing periods, or they're getting a lot of break evens, and they never go to investigate what was the difference from the previous week like this, where I saw lots of higher highs and higher lows and trending nature. We have to go and study these things. Monday opens up. There's the closest boundary. We hunt it. Monday opens up, closest boundary, we hunt it. Monday opens up, closest boundary, we hunt it. Monday opens up, closest boundary, we hunt it. Over and over and over again. So this is exactly what we are talking about in the mentorship all the time. We're talking about these powerful statistics that help us give an edge over everybody else. It's very, very hard to compete with traders who have such a strong statistical edge in the market. You can work with your entries and you can work with your high risk reward and you can do all of these things. But trading without statistics is basically trading blind. And really understanding that, okay, well, I know there's an 86% chance that we're going to reach this low. It gives you more confidence in catching all these waves into this low and scaling in until we hit that low. Just like here and here, when we come back inside, if we start coming back inside and shifting to a bearish market structure now, you know that there is a 52% probability that we'll hit the midpoint. So you may target that area, but there's only a 13% chance that we'll hit this low on the same week. So that's something that you would realistically stay away from. So it's important to understand the statistics for you to get a better idea of where your targets are, what sort of direction you should be trading in. And especially if you're not trading with an understanding of the fundamentals, you need to understand the statistics behind what you're doing. And once again, I'll say, if you're interested in learning about fundamentals and macroeconomic drivers, we send out a morning report every day. We have Theory Thursdays where we help people understand what are the fundamental drivers. What do they mean? How can you carry out fundamental analysis? We break it down into such simple detail to help almost, we explain it as if we're trying to explain it to a 5-year-old. We make it basic. We make it easy to understand. This is why this is happening. This is why you're seeing the dollar weaken right now. This is why you shouldn't, short euro dollar, etc., etc. We're helping people through the process, and we're helping people make better informed trading decisions. So if you're interested in joining Conquer Macro, you can head to the description below, and it'll be in the link below. You will get the pre-sale if you see this video tonight, because our pre-sale finishes tomorrow, and then prices will never be that low again. And if you're interested in learning more about a statistical approach, you can look at the mentorship, which is also in the description below. But I'll basically leave you with this. Go and test these things, add them into your back testing, become curious about what you're doing and your findings. If you've seen something, test it. Don't add it into your trading without testing it, because I've shown you over and over again that people will say things. They will say that, oh, like I said, if a market hits one side of the boundary, it will hunt to the opposite side. No, there's actually only a 13% chance that we'll do that, and an even less percent chance if you don't even wait for a market to close back inside the boundary itself. So work with the statistics, become bigger and better every day, focus on those 1% improvements, and conquer the markets.